Good morning, everyone. This is daily trading analysis with the weekly recap for this week, which has been a roller coaster for both the market and also for me. I had a surgery and I've been trying to recover from that since Tuesday. So sorry about the delay in these videos. I basically didn't have time to and and I'm back for the weekly recap. I will try to squeeze in some videos from now on, but I will have to take some time the upcoming weeks. So sorry for that. But anyway, this week I've been following the price action, I've been following the data and the earnings, and I'm not happy. We are going to cover first the economic data, but then we are going to see some earnings and how those change the sentiment and where are we in terms of levels and possible forecast for the next week. So first, the economic data on Monday, basically nothing. Tuesday, we got the JOLTS openings, 7.4 million less than expected. And also house price index still pushing at 4%, and that's not really good. The best number of the day for Tuesday was the consumer confidence at 108. We were expecting a little bit less than 100, but we got 108. So consumer confidence is still pushing and kicking higher the sentiment. But on Wednesday, everything turned south. We got the MBA 30-year mortgage going higher from 6.5 to 6.7. This is really affecting the applications. And also, the ADP employment change crashed everyone's expectations. 233,000 employees. I mean, also the GDP was quite interesting because we are seeing how the growth rate, this is an estimate, by the way, the advance for Q3, we got a little bit less than estimate. We were expecting 3% and it's now 2.8. Prices are going south also. Sales are skyrocketing, but prices are also lowering. So I think this is a little bit of misses in both sides. And also consumer spending is still quite strong, aligned with the consumer confidence. So that coupled with the fact that we still have higher pricing, I think we are starting to see some kind of concerns and warning signs about the economy on there's no growth. Excuse me, there's no as much growth as people is expecting. We put the threshold, we put the level so high for these earnings and for the growth of the economy that the numbers are not meeting expectations. And I think investors are pulling the rug and they are just going out of the market. I have evidence of those flows. So bear with me. Let's continue. Thursday, we got the PCE 0.3. So going higher, that's a miss. Personal income going higher, that's good. Personal spending 0.5, that's not good. I mean, it's good for a little bit more of growth and revenue, but it's not good for inflation. And we have now a mixed bag of good data, but bad data at the same time. Initial jobless claims 216 going lower. I mean, we need unemployment to go higher. And that's what Friday gave us. NFP 12,000. Big miss to the downside. We were expecting 113 and we got crashed on the payrolls, and unemployment is staying at 4.1. 4.1. Then we have a little bit more concerns about the global manufacturing. As you can see, we have here, we are still in contraction territory. Even though we pushed higher in the manufacturing, in the PMI, we were lower. In the manufacturing employment, we were lower than expected. So I think this also increased the concerns and the worries on everyone's, not only traders, but investors, but analysts. And this week we have a very, 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 very big week. We had AMD and Alphabet. We had Microsoft and Meta. We have Uber and Peloton. We have Amazon and Apple and Intel. And the overall sentiment is that it's not as expected. The era of hyper growth, it's over. AI is not pushing the earnings as much as everyone is guessing. So that's quite concerning, because then we have things like this. Let me show you down here. On the left hand side, we have the volume, and on the right hand side, we have the advanced decline line. So basically, this is the week for volume, and this is the week for the advanced decline. And as you can see, we spend a lot of time going outflow with outflow. And look at this, down, 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 and down. And we were down here on Tuesday. So the market internals are showing us that people is just going out. We are going out, we are seeing outflows, we are seeing declines, and this is the biggest week on earnings. Why are we seeing this? Concerns about the economic growth, about the revenues of these stocks, and also the upcoming election. So let's go to the market to see the price action. Let's start with the weekly, because I would like to show you something. The first thing is that this week is basically 1.69 in the red. We got a little bit of push, exhaustion, and then the big move low. So I want you to also see the previous week candle, and also this week. I'm going to show you how I was trying to level the consequent encroachment. And then we are still in the inverse. We are still rejecting this zone. So from that, if we go to the daily, we can see several things. See a volume imbalance, and we can see Monday, Tuesday, Wednesday into Thursday was the big day. We took the pivot, and we are just here. So my first sign is that we are going to see the typical H or levels, like for example, this one, this one, or the daily fair value gap that it's below 19,500. So I think we might see more downside. As I was saying, this is the consequent encroachment of this week on the weekly candle. And then I have also this week for the downside. So we are in between these two, and in lower time frames like the 1 hour, we are seeing something very, very interesting. So we started the week right here, new week opening up, and immediately the first day it's just rejected. We tried a second time, and we just smashed the price down below the daily volume imbalance. When you are in a new week opening gap, when you have a daily volume imbalance and you continue lower, I mean, be really careful, because most probably big money, big pockets are pushing to the downside. And we have these two clear targets of liquidity sell side. We have this 1 hour that got wrecked, and now it's offering resistance. So these are all bearish signatures. So on the 1 minute, the only trade that I took on mobile was this setup on Thursday. We were selling off during the overnight, and I was watching to buy. Was quite concerned about this, but I mean, this was the setup that I was looking for. The inverse fair value gap into a bullish fair value gap with a pivot. This is basically a breaker. We tapped the breaker, We tap the pivot, but I enter as low as possible into this. So I was just moving my entry, moving my entry, moving my entry, moving my entry, and I got triggered in this candle at this. My target, lowest hanging fruit at this level. Just that. I don't need a huge move. I don't need to catch all this because then this happens. So in this environment, longs are not welcomed. So you have to really manage your expectations. And that was a 1 to 6 risk reward ratio for 33 points, $600. It's more than enough. I've been not pretty well this week. The market is not well also, is not receiving longs the same way as in the past. So that's it. So that was my trade, my only trade. Let's analyze the last day, the Friday, because on the 15-minute, remember I used the 15-minute for the narrative. This is where are we on the weekly. Look at this gap. We rejected that and we just finished a little bit higher, 0.66, but I mean, it's not what you want to see because we are respecting this bullish fair value gap that it's now following the inverse. This 15-minute got run through. We went through this liquidity and we are right in the middle of this range. As you can see, this is Friday's range and we are just in the middle. So when we are in the middle, we have to exercise patience, and it's quite difficult to do that for this chop. I mean, look at this. Pretty difficult to trade this. And the ES, it's offering you more information. You can see we had this pivot here. We are now below that. And the most interesting part before moving into viewing the earnings is the RSP. Look at the RSP because here we have something really interesting. We've been going higher and higher and higher on every single indication being divergent. We have a bearish divergence in the long term. Stocks above the 200 DMA, it's going lower. It's doing lower highs. We got this and we got tapped on the horizontal. So the ES was, the RSP was doing new all-time highs while there was internally no strength. The same for the 50 DMA, the stocks are flat. And the same for the momentum one. Momentum is in the lowest level since September. So be really careful because we have internals showing you that flows are going out, decliners are pushing down. We have a bearish divergence in the ES. I mean, be really careful. We have also on the XLF, we are now battling with the 20-day moving average, and I think there are some signs of concern. Be really careful on that. Just adjust this one in here. So let's review what happened this week in terms of earnings real quick. We had Intel. Let me just put the 1 hour. We have Intel trying to squeeze higher. We had Peloton declining 14% after a big squeeze. We have Uber that got smashed down. We have MasterCard smashed down. We have AMD being smashed down. And then the big ones, Meta not meeting expectations, being smacked down. Google trying to push but rejected. Fill the gap and rejected. We have Amazon. I think Amazon is the only one that was really pushing and holding. But again, Microsoft smashed down and Apple on low demand from China smashed down. So you can understand why I'm so hesitant on promoting an optimistic and bullish view right now. I'm seeing bearish signals on the price action, seeing economic data not good enough, and I'm seeing the earnings on the biggest week of the year it are not enough, are not meeting expectations. So what do? You go out of your positions, you take your profits, and you reassess towards the end. But in the middle, we have the elections. So we have to really be really patient to see what happens. Anything can happen in this election. And after, I'm not going to enter into politics, but that's uncertain. The big uncertain, it's the election. I think you know me, the daily is not looking good. I can see the small dead cat bounce, but I can see the Nasdaq just doing the typical bearish move towards more liquidity. I think 20,000 is going to be key, but we have all this liquidity here that might be the target. The first level might be 19,800. We don't have any fair value gap. We might see some kind of middle ground around 800s for the discount week, but I don't think we are going to stop there. I think the first fair value gap that is going to appear, it's in between here on the Nasdaq around 500s, and we have one there, and we have also another one. Which one is going to be useful? Honestly, I'm going to go with this one. Why? Because we have here a breaker, we have a discount, and we can have a better price down there. If things accelerate to the south, I have basically 19,300s. I might see 500s to see if I can scalp something, but really, I think people is going to try to buy it around here. I'm not going to do some trend lines. I don't care about those trend lines, but there's certainly an area of interest for me in there. Let me just do also. Okay. So there's certainly an area of interest for me that I would like to see. So I'm going to keep that. By the way, we are below the daily and the weekly. That's something that affected. It went up and then went down. So I'm going to just remove those because I don't think they were pretty accurate. They were the setup for the manipulation move to the upside. So I'm going to leave those there. I'm going to adjust last week high here and last week low. So we expanded both sides. There it is. We have on the 1 hour, we have this week. Let me just read that I explained. It's just some cleanup for you to only see where I have the eyes. New week opening up with the daily volume imbalance. That's here. We have the weekly consequent encroachment, the 1 hour inverse. I'm going to do this. And I think that's all. I'm also interested in 1 hour week. That's and I think our first stop is to see how the market reacts here around 800. So let's remove previous liquidity. And I think that's pretty clear. On the daily, I think we are going to see more lower. And let's see if we stop at 800s or we continue towards everybody. That's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel. I upload videos like this one every single Saturday for the weekly recap, and from Monday through Friday. Now that I underwent surgery, it's going to be a little bit difficult the next week, but I upload videos every single day for market forecasts, market updates, apps. Sorry about these days, but I had personal issues. I hope you understand. But remember, discipline, patience, risk management are key for your success. Stay safe, everyone. Have a nice weekend and see you most probably on Monday.